Testing 1 2 3. Testing 1 2 3. What's up, Milan? How are you doing this morning?
Now we got 1 minute.
All right. Test 1 2 3. Test 1 2 3. Oh, why it's not coming on Facebook?
Dude, you'll never guess who I have for tomorrow's show.
Who?
Kesha.
Really?
Kesha. The Billboard artist Kesha.
Yes. Man, why is it not coming on Facebook? My mic volumes and all are good, huh, brother?
Yeah, sounds fine.
Okay.
Yeah.
Don't know why Facebook's not coming on.
Broadcasting to the Gumbo Nation for 6+ years.
Everybody come on, let's get down.
Providing education and options to listeners throughout the Gulf Coast and the nation. Mortgage Gumbo is brought to you live weekly by the Total Home Authority, Team Title, Tito's Homemade Vodka, TWFG Bidenkopf Insurance Group, The Fence King, 360 Home Inspection Services, and Bienvenue Plumbing. Mortgage Gumbo is the leading authority for all things home-related. So, let's spice up that bowl of mortgage awareness with the man who is high in mortgage knowledge, yet height and hair challenged. The man who only knows how to put the client first. The true definition of a face for radio. The leader of the Gumbo Nation, Dwayne Stein.
What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. And I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And if you want to join the show, there's several ways. 504-260-0995. Or you can shoot an email to info@mortgagegumbo.com. Hey, all those social media pages right now, hey, it's live radio, so we'll try to get some of that stuff uploaded right now. This when you got these fancy systems, sometimes they just don't work. So we'll get there. Yep, I know you see the T-shirt here talking about the Falcons and what I think about them. It basically says Falcons Buck, except with an S instead of a B. So it is what it is. It's Falcons week, so we know what that means there. But, hey, I want to get this show started by listen, I'm Lakeshore. I'm a Lakeshore Titan guy. I live over on the North Shore, and kudos. My son happens to be a freshman playing on varsity, so even getting some playing time, so that's good stuff. Congratulations to Coach Jones and the Lakeshore Titans. Hey, they started this year off with some challenges, very young, but they are District 9 Quad A champions again for 4 straight years. So got to give some kudos out there. On the show today, we are going to prep you because spring is not going to be the home buying season. The home buying season, in my opinion, starts now, right? So, and it's been going on really all summer with the low rates. So we're going to give you the questions that you need answers from your lender on. That's right. I'm going to arm you with the questions that you should be asking your lender, and that lender that you choose should be able to answer. And over the next several weeks, you'll want to be tuning in or go catching our podcast on right here on iHeart or iTunes or Spotify or wherever in the world they're at, and checking out, because we're going to be sharing over the next several weeks several tips, right? What are some pitfalls of your real estate, your purchase agreement? What are some of the things that agents should be asking for you, right? So we've got a lot of those things. When making an offer on a house, what are some big mistakes that are made? So we're going to be discussing that also over the next coming weeks. And then headlines. You know, headlines, regardless of what you think about media, this and that, and I guess people would say, hey, I don't think I'm in media. I guess I'm in entertainment. But, you know, these headlines, we're going to break them down, because I've got 3 headlines right now, and I want you to just kind of digest on this for a second. Mortgage demand, and we're going to go over all 3 of these because they all 3 go together. So listen to these headlines, and I want you to kind of start digesting. Mortgage demand from home buyers drops to lowest level in 6 months. America's mortgage debt soars to a record $10 trillion. U.S. house prices surge. So those 3 headlines we're going to break down in a little bit and kind of talk to you about those things and how headlines can so be misleading, okay? But one of the things I want to start the show with is, listen, when you work with Mortgage Gumbo and you work with anybody on the team, here's what I'm going to tell you. We're mortgage advisors. We're debt managers. So our job is to present you with options. Sometimes when we're giving you those options, you may not like it, you may not understand, but we are going to, by the end of our conversation, you will know and have a full understanding of what we're looking to do. I get you've been in your house for, 20 years, and you've got 13 years left on your mortgage, and you want to refinance and take advantage of the rates, and you don't want to extend your term. I understand. But if financially you don't qualify for a 10-year mortgage, we can play pretend, and I can tell you what it would be like. But unless you're going to go to your boss and get more money, or you're going to be able to maybe improve your credit score to get a better rate to where you qualify for that, sometimes things just can't be done. Right? So whatever some of those sayings is, you can't put it back in, or whatever the deal is there. I'm usually pretty good with cliches, but not on something like that. But there's reasons why at Mortgage Gumbo we do what we do. Again, we are advisors. We're mortgage advisors. We are debt managers. We're not just some smuckatelli who all of a sudden got a job inside the AC and is going to try to guide you on your most valuable asset. So why do we do what we do? Well, that won't happen to me. I hear these things all the time. And I heard them for years prior to that, listening to Gregory Ricks' show before being fortunate enough to join him, which, by the way, tune at 11 today. We're going to go over the 10 commandments of when applying for a loan with Greg today on Winning at Life at 11 o'clock. But why does Mortgage Gumbo do what we do? Number one, everything that we do, because we are advisors, is based on your well-being, not mine, not what benefits me, but what benefits you. So yesterday I got a phone call from a married lady. Her husband is a pipe fitter, okay, and she works at a bank. She's in banking, and she's building her home. The land that she has is family land. It was given to her through generations, and the goal was to have all the family members. They each got a little piece of land, and their goal was for them to be able to build and all have like their own little community within this land. That's what the great-grandparents wanted and all this. So this married lady calls me, banker. So, got to swallow a little bit of pride there right off the bat, right? I mean, I'm a banker now. I'm calling a mortgage guy. So good news is her finances were in order, right? I mean, she was banker, and her finances, everything was fine. But when people call me about this one-time close, because construction's through the roof right now, and we're getting multiple applications daily on people wanting to build and get qualified to build because it's so easy. You don't have to make payments doing construction, blah, blah, blah. So I could just tell she's in distress, right? And this is about 4:15 yesterday on a Friday. Yes, I'm out there working, right? And I would say 30 to 40% of the people that call me, they want to self-build. Well, I'm going to self-build. I've got some, I'm going to do that. And to be honest, we don't do it. We're going to vet your builder to protect you, and you're going to see why during this story, because that won't happen to me, right? So this lady and her husband, who are building on their family land, building what's going to be their dream home, right? Their fortress, their roof over their family's head, living out what the grandparents' legacy was and dreamed to leave them with land and build a house and have their own little community. So 4 out of 10 people will call me saying, hey, I can self-build, or I have a friend. Well, so did this couple, right? This couple also had a friend. But because they trusted, and I'm using air quotes, their family friend, they're now having to look at options that not any of us would ever want to be in. Because I told you the financing was in control, right? So she thought. So here's what the friend didn't know how to do, the family friend that had a hammer and, went and picked up a couple folks, came over to the job site, and because he had a truck and a nail gun, sold them on the fact that he could build a house. So this friend, what he didn't know how to do was estimate lumber cost increases, which are through the roof. Okay? This friend used unlicensed plumbers and electricians, and it has cost them thousands, according to her, thousands to fix faulty inspections. 3 different failed inspections on electrical and 2 on plumbing. And just so you know, when you start failing plumbing inspections, you're busting up concrete. There's a bunch of different things going on there. The family friend, needed $10,000 up front to start the work. He was going to help get the licensings together and all that. It's called soft costs. And you think, well, $10,000, okay. They're building a modest home of $140,000. Okay? They're not building some home over in, uptown or off of, Old Metairie Road here. This was a family lot, as I mentioned earlier. So now what's happening is this. They now went and got approved based on what this family friend that they trusted, that's what they went and got approved for. Well, now with COVID and with different things going on, they're trying to go back and get reapproved. And she works at a bank, and guess what? The answer is no. The answer is now no. So what kind of things is she forced to now be looking at? Well, their lot. They may lose, or they may have to sell because they can't complete the construction. They're now paying bank overages because they're out of their building time. Their rate has skyrocketed because of this. It's like that credit card. When you go over your limit, it skyrockets. So my point to circle back around here is, folks, make sure you're working with somebody. We guarantee, when you do a one-time close with us, we guarantee the loan. That means no matter what happens to you, you get promoted and you move out of state or whatever, it's not coming back on you. If you're a builder and you're approved with us, the house is getting built regardless. You're still going to make your money. Agents, you're still going to get your money. So understand this. That's why when you call and you go, oh, well, I'm going to self-build. We know it won't happen, but it happens all the time. And that's why I said 30 to 40% of people are asking if they could self-build. In 99.999, you know what? No, 100% of the time, on a one-time close, the answer is going to be no. That's why we vet our builders and make sure, because we don't want this happening like this young lady who's in banking, like this gentleman who's a pipe fitter, who's had his hours cut because of COVID and all these other things, and then they're stuck because they don't qualify for more money. And we're going to try to bail them out with some kind of special program, but I can't guarantee it, so I wanted to share that with you. Hey, on the show, on the other side of the break, we're going to get into headlines. And also, we're talking about what questions do you need to be asking your lender. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
Three minutes.
All right, brother.
I was going to start the music, but you were on a roll, man. I didn't
No, man.
I didn't want to mess with your vibe.
No, man. I appreciate it, bro. You good. All right, let's get out of OBS altogether. Testing 1, 2, 3. Testing 1, 2, 3. Testing 1, 2, 3. Testing 1, 2, 3.
All right, 10 seconds.
All right, brother. We're back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. And I am your host, Dwayne Stein. This segment's brought to you by The Fence King. Visit FencedThisYard.com. FencedThisYard.com. 20 years experience, 170-plus five-star reviews. With his one-of-a-kind virtual fence designer, you are in control. No high-pressure sales. Some kind of way, he Googles in, you can get in on your home, and you could design, measure. I've done it. It's absolutely amazing. I'm having my fence installed at my new office in a couple weeks. He's also offering tropical storm and hurricane posts. And his work comes with a warranty. Visit FencedThisYard.com. All right, so headlines. Listen to these headlines again. You've had time to kind of digest. America's mortgage debt soars to a record $10 trillion. Soars to a record $10 trillion. This is so misleading because what that means is that more people are homeowners. The best debt you can have is homeowner debt, right? If you're going to have any kind of debt, that is a good thing. Rates are always sitting around flirting with lows, and that's another misleading thing, new all-time lows, but whatever. But people are out buying houses. Mortgage debt alone increased $85 billion to $9.86 trillion between July and September alone. In 3 months. So for those who are saying, hey, for those who are saying, oh, I don't know, should I buy a home? People are out doing it. People are out doing it. Mortgage demand drops to the lowest level in 6 years. Listen, it fell by 0.05%. And what's been going on? This is in just a week. This is 1 week. Mortgage demand for home buyers drops to the lowest level in 6 weeks. This is from 1 week. But what was going on 2 weeks ago? Elections, tons of uncertainty. Right? So it just, that drives me bananas. But then, hey, U.S. home prices surge. Well, yeah, U.S. home prices across the country increased 12% in the third quarter alone. Well, that kind of goes with that other case of mortgage debt soaring. If people are buying houses, guess what? They're paying a little bit more because you got lower rates. So is affordability on the rise? Yes. Is that a concern? Yes. 181 out of 181 metropolitan areas, the home values have risen. That is reason to buy a house. Whether it's COVID, not COVID, there's not a better investment out there. The nationwide median price for a single-family home in a quarter rose to $313,000. Listen to this. Again, these headlines. At the end of the quarter, 1.47 million previously owned homes were available for sale in the U.S. That's 19.2% fewer than a year earlier. It's only going to take 2.7 months to sell those homes at the current rate of deals. So years ago, we were at a 2-year inventory. We had so much on the market. So these are good things. Construction loans will continue to blossom. First-time home buyers will continue to drive home buying with the rates where they are. Previously owned homes, those will be purchased as well, but they'll use things like you see on the DIY, the HGTV. They'll come with the renovations. They'll come with I like this home, but I don't want it to be Brady Bunch. See, my younger employees wouldn't know what Brady Bunch is, but for my listeners on this station, hey, I know what my demo is. You know who the Brady Bunches are. So you've got to understand when we start looking at these headlines, it's so misleading. So misleading. Now, do we need to discuss the elephant in the room? Do we need to? Listen, there's something called forbearance that we've been talking about all year long. Okay? And my concern with the forbearance is this. It's for those people who took it as a mortgage holiday, which we asked you not to do. But what about those folks who took it on auto and student loans? See, because all that stuff's running out at the end of the year. And there's a lot of you, or you know people who are going to be in limbo. And I am already seeing folks out there who have used forbearance as a mortgage holiday or an auto holiday or a student loan holiday. And if you remember, we told you investors will get their money back. And you're going, well, they put it to the end of the contract. Well, if you're still out there saying that, that means you haven't tried to refinance to take advantage of these awesome rates. Because those who are refinancing and taking advantage of today's rates are understanding that anything that was put in forbearance has to be brought current. The investors, these servicers, we're not just going to allow people to just take advantage of something if they truly did not need it. And that's kind of what we're seeing. Because I don't care who you are. Whether it's me, Santa Claus, the turkeys that are getting forced into the pen right now. If you take a breather and you check out on 1, 2, 3 months, there's a lot of us out there who can't rebound from that. Hence the credit card companies coming up with minimum payments. Heck, Sears built the tallest building in the world for, decades upon decades by collecting $10 a month. So when it comes to these headlines, look into it a little bit deeper. Figure it out. And we're always going to err on the side of truth because there's only one thing to do, and that's to be upfront and tell you truly what's going on. So while mortgage debt is soaring, that is a good thing. Mortgage debt, in my opinion, is not a bad thing. It's home ownership. And we're talking about home prices keep surging and going up. Well, if you're a homeowner, that's a good thing because that means the value of your home's going up. That means when you call me and go, you know what? I want to take advantage of, I got this low rate, but, now I want to do some home improvements. Well, that's what's going to allow you to be able to do that. So just keep an eye on these headlines. We're going to keep you in the know there. But mortgage demand for home buyers drops to the lowest level in 6 months. Now, that's a 1 week, 0.05%, and it's a joke. It's a joke. What we need to be more worried about is this. The velocity of money. Who knows what that is? Go ahead, raise your hand. Who knows what the velocity of money is? See, the velocity of money is at the lowest that it's been since 1949. And what that is how much money, how many times money turns over. So if you go out and you buy a car, that salesperson and that dealership make money, right? The car manufacturer makes money. That salesperson goes out. He goes to a restaurant. Then that waiter or waitress, that server, makes money. They go out and buy something. That restaurant goes and buys more goods. Maybe updates, gets some new furniture. So that's how debt affects money. And right now, the velocity of debt is at an all-time low, which means that dollar just is not turning over. If I spend $100 and you spend $100 and we both go buy a boat, let me make it simple for you. Dwayne buys a boat and you, the listener, buy a boat. But you're smarter than Dwayne, and you take that boat and you decide you're going to go catch some fish with it or some crabs or some shrimp. And then you go sell that. But I just put gas in it every week and drive around and run it up on sandbanks. But, that's a whole nother story. Then you're doing a better job with that money. So your velocity of money is a lot better than mine. So those are the things. Look it up, velocity of money. Read about that. That's what's important. That's things we're going to keep our eye on. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. If you want to join the show, 504-260-0995 or shoot an email to info@mortgagegumbo.com. On the other side of the break, get your pen and paper out. Hit record on your tape recorder because I'm going to give you the questions that you need to be asking your lender when it comes to signing for a home loan.
4 minutes.
All right, brother. Hey, we'll hit the rate watch right when we get back.
Oh, when we come back. Okay, cool.
What's up, Ashley? How we doing? Bobby, Brett, Nikki, Tracy, Barbara, Mark, Tommy, Milan. All of y'all hanging out on Facebook. Appreciate it. Little technical issues, so we going old school. We had to go old school here. Old Restream's not working. Testing 1, 2, 3.
All right, 10 seconds.
We're back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. If you want to join the show, you still got time. 504-260-0995. The segment's brought to you by Bienvenue Plumbing and Repairs. Visit bienvenueplumbing.com. See our story earlier, if you missed it, if they'd have used Bienvenue Plumbing, who is licensed and insured for over 20 years. Mark's built his business based on three things: reliability, professionalism, and affordability. You could trust Mark and his team of licensed and insured business. Unfortunately, our story earlier did not talk about that. He's the best. Visit bienvenueplumbing.com. Let's get into our weekly segment we like to call Rate Watch. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first handcrafted vodka. It is absolutely delish. Hey, 30 years. Last week, 2.94. This week, 2.87. Not too bad there. Sounds good, right? So it's right in line where it was a couple weeks ago. That's what I'm saying. We're not, when we keep seeing all these all-time lows, it's a little bit misleading. So you got to be careful. There's a lot of data that goes into that. Believe me, if I come on here being like all-time lows, then you'll know. 15-year, 2.40. FHA, 2.35 from 2.40. Again, all these are 5/100ths of a basis point. So it's not like you're going to see all this on the rate sheet. And keep in mind that adverse market fee is going into effect on December 1st. Okay? A lot of investors have already started to put it into their rate sheets. Jumbo, 3.30 to 3.25. The 5/1 ARM, 2.65. Goofy to even consider that. And the VA is hanging around in the mid-twos. Just a fantastic program. Hey, if you own a home and you have a VA loan right now and you don't need cash out, you really got to give me a call. What we're doing for folks right now with the VA IRRRLs is absolutely amazing. No income check, no appraisal, anything like that. We're getting these things closed in record times as well. So let's get into our segment this week, which over the next couple weeks, like I said, I'm going to do my best to prep you. I want to prep you, and anytime you want to go check out a show, just go to mortgagegumbo.com, check out the podcast. You could also find them on iHeartRadio, of course, the mothership there, iTunes, Spotify, you name it. You can always go find what I consider a plethora of great information. Y'all must too, because, hey, the show keeps growing. So questions that you need to ask your lender. So we're going to go through these over the next couple segments, okay? And the first one, and I've put these down here, is what type of mortgage loans do you offer? What type of mortgage loans do you offer? Well, it depends on who you ask there, right? Because y'all know by being listeners of this show, there's two types of loans. There's conventional and there's government-backed, right? However, how many of you know someone that said, oh, yeah, we do conventional, or, oh, yeah, we can do FHA loans, but they were denied? Well, that's making sure you ask that up front, because you need to know, hey, what type of credit scores do you use? Do you have limits on your credit scores? Because we're fortunate over at Mortgage Gumbo every single day, thanks to SnapSendAndSave.com. SnapSendAndSave.com. We help people every day that have great jobs, that have great income, but maybe they've got a ding on their credit. Maybe they had a little bankruptcy in the past or a foreclosure. And when you go to that other person that says, well, yeah, we do both. We do conventional and FH and government-backed loans. You got to dig in. You got to ask the why. You got to ask the how. You need to know. So that is the first question. What type of mortgage loans do you offer? Then the second question, which is as important, is what loans do I qualify for? You need to know what your options are. Because, as we just said, if Schmuckatelli's offering every loan program out there, but their rules are way too tight, is that benefiting you? Heck no. This, again, is another reason why we created SnapSendAndSave.com. You could upload a statement. You could put your information in. In less than 30 seconds of being on this site, you can send me your information, and we'll let you know what your buying power is, what size home you can build, what refinance options are available. So when you ask what loans do I qualify, I want you to be more specific with them and say, hey, listen, what options can you offer? The other question I want you to ask is, does your interest rate include points, discount points? I can tell you right now, more than 90% of the loans that we're doing include discount points. And you go, well, Dwayne, why if rates are so low? I'm going to tell you why. Because when rates are low, you know what everybody wants? Lower. Everybody wants lower. So if you're working with a lender that knows how to work the discount point system, then you're working with somebody that you can help take advantage of what points really do for you. Because while it's a little bit of out-of-pocket cost, it saves you tens of thousands of dollars over the long haul of the loan. So you've got to understand why, hey, a 3.25 and I bring you down to 2.875, that's going to cost you a point. And you go, well, wow. You know, I got, a quarter plus an eighth. I mean, that's pretty awesome. And then you go, well, hey, how much to buy another point? Well, the next point might be 2.75. So we're not going to look at it. Go look up points. I've discussed this on previous shows, but it's very important. So ask, does your interest rate include points? Because so many times when people call me to say, hey, can you review what I'm getting somewhere else? And I get it over, and the person owes $140,000 on their loan, and they're giving them a $140,000 loan quote. You got fees, you got taxes, you got insurances, you got title insurances, you've got a payoff. So be careful with somebody who's selling you one thing, and that $800 payment sounds so good, and then all of a sudden it goes to $910. This is a big one. Put a star by this one. Do you charge an application fee, credit report fee, or any other upfront fees? If they do, run. Just start running. Whether it's out into the street, it might be better to get nicked by a car than to work with somebody that's charging you credit report fees, application fees, and upfront fees. In most states, thankfully, application fees have been limited or illegal, but you need to be asking, because I'm amazed at how many lenders out there will charge for a credit report. Listen, am I going to charge you for the credit report when we close the loan? Yes, absolutely. But am I going to up front? No. That's the cost of doing business, right? You're coming to me. You're trusting Dwayne Stein and his team over at Mortgage Gumbo to help you with your most valuable asset. I'm not going to charge you a credit report to do that. I appreciate the opportunity for you to trust me. I appreciate the opportunity of you trusting my team. So you should not pay 1 red cent up front ever. Ever. So make sure you put a star by that one. We've got a couple more. When we get back on the other side of the break, we're going to cover this. What we're talking about right now is simple. What question should you be asking your lender before you sign on that home loan? You got one segment left, folks. 504-260-0995. Or you can shoot an email to info@mortgagegumbo.com.
Dwayne, we got 15 seconds, but we got a Mary in Hammond, who wants to ask about a refi.
Okay. And we feeling the Saints this week, that's for sure. Big week against the Falcons. Hey, get back and get healthy, Drew Brees. Let's go to – you listen to Mortgage Gumbo with Dwayne Stein. Let's head to the phone line. Marion Hammond, understand you have a question. How can we help you out, ma'am?
Well, I was wondering, I've been considering possibly refinancing my home.
Okay.
I have, I think, quite a bit of equity in it, but I would like to relocate, but I just don't know that I'm ready to do that right at the moment. I think it'll probably be 4 or 5 months at least before I get there. So I just was wondering if I could take advantage of the lower rates, refinance now, and then purchase something in the not too distant future, or if it would be better just to make a push and try to find something and purchase now.
Yeah, I would, Mary, that's a great question. So number one, the first thing I'm going to tell you is if you're even considering moving, heck, not just in 3 or 4 months, but within the next year or two, let's not refinance, okay? Let's while those rates are pretty, the bottom line is the number on a piece of paper doesn't buy bread and milk for you, Mary. So we're not going to do a refinance. I would say let's stay away from that. What I would say is, hey, let's look at what can you get for your home now, and let's look at what some of your options are for moving into that next house. Let's take advantage of the rates that way. Unless you tell me, well, Dwayne, I'm keeping this house as a investment property or something like that down the road, that is going to be income stream for me, then I would say let's stay away from the refinance. Are you looking at keeping the house as an investment property?
No,
or are you looking at
no, I'm definitely going to be putting the house on the market.
Yes, ma'am. So this is a market right now where it's fantastic for home sellers, okay? So the advantage that you have right now is you're going to be able to get rid of your home pretty quick, right, by listing it. Mm-hmm. So the other thing is you're probably going to pay, listen, just like you're going to expect a premium dollar for your home, expect to pay that on the other one, but that's okay. Your affordability is going to be much better because of chances are the rate that you have now is going to be better than where you sit when you purchase this house. Income's probably a little better. There's different situations there. Plus, how much money are you thinking in the perfect world you'll be able to get out of this house?
I'm hoping to get 150. It's a small home, but I mean, I really don't know. I haven't had it appraised in 10 years.
Sure.
So.
Yeah. Well, call me Monday, and I can definitely help you out with giving you an idea what the value is and put you in touch with some folks that can do that. You can call day jobs 504-207-7600, and we can get you a little bit of an evaluation so you'll have an idea there, because the last thing you want to do is, sell it under value. But, I mean, if that's the case, guess what? You'll be able to use some of those funds and put that into the new home, which is going to allow you to get a larger home with probably a lesser payment than you have right now, Mary. So let's hold off on that refinance. Let's talk a little bit more seriously maybe Monday about how to what your options are, how serious we are about moving, where you're looking to locate, because there might be special programs there once we start getting into income and stuff like that where we can help you hold on to a lot of those funds.
Well, that sounds great. Could I get your phone number one more time?
Yes, ma'am.
For Monday?
Yep, 504-207-7600. And you can call at any time. We've always got people standing by, so we can get your questions. And, hey, we'll try to get back to you over the weekend. If not Monday, you'll definitely hear from us.
Oh, that sounds great. Thank you so much.
Thank you, Mary. Appreciate you listening. Thank you so much.
All right, bye-bye.
All right, so, hey, we're talking about questions that you need to ask your lender before purchasing a home. Here's one here. Do you charge for a rate lock? That is a fantastic question, if I must say so. I mean, I wrote it down. The answer should be no. The answer should be no. You should not be being charged for any type of rate lock. Now, if there's extensions or something like that where your rate needs to be extended, that's a little bit different. And again, the part of me that's a mortgage advisor, what I want you to know is, do me a favor, for all of you out there that's working with a lender right now, that's not me, call them Monday and go, hey, listen, why do you do the locks at 15, 30, 45, and 60 days? And you know what they're going to tell you? Well, that's about the average time it takes for us. When we're closing a loan, we want to make sure. Rate locks are not based on how quickly someone closes a loan. It gets so much deeper into that. And see, that's what we know. That's why we know how and when to lock you. Sometimes I'll lock somebody on a 45-day lock, even though they're closing in 2 weeks, because the rate's better. Because you got to know what the back end, what the secondary market's looking for. Ask that question. If you get that answer, run. Do you have an interest rate float down option? Yes, we do. And you know what? It's free. We let you know. If the rate changes by up to 0.25%, okay, where there's an impact on the back end, not in your rate, so to speak, not from 2.75 to 2.50. Keep in mind, in our world, when we're looking at the rates, you're looking at that number on a piece of paper, which I agree is the most important thing. But for us, it's based on what I sort of just mentioned. We're going to do a class on it because I'm going to do a secondary market class. See, what we're looking at is, what can I sell this loan on the back end? What are they offering me the premium for? So, yes, we do offer float downs for free. It comes with every one of our loans. This week, called 3 people and said, hey, guess what? Good news. I was able to get your rate down. Doesn't cost them anything. I'm looking out for them. It's automatic. How long will it take to get my loan from application to closing? This is so overlooked. While we close our loans on average less than 20 days, the national average right now is over 40 days. And you know what? With COVID and stuff like that, I understand. When you throw in COVID, when you throw in the fact that rates are at all-time lows, things are extended a little bit. But this is a very important question to ask, because most of your lenders are going to answer that previous question that I told you to ask them and go, well, that's about how long it takes to close. So just make sure if they're locking you in on a 30-day rate and you're getting them everything they need and they're taking that time, hey, make sure you're not paying for that rate extension. Also, be careful because you don't want it to cost you, right? You don't want to have to pay an extension fee. You don't want to miss your closing date, right? Then the seller has the option to pull a contract. And in this market, sellers are very, very confident. Saw it happen about 3 weeks ago. For a friend of mine, that was the seller. They pulled the contract. The person missed the closing date. They gave him 72 hours because the lender said, well, we're right there. Gave him 72 hours. Couldn't deliver. Pulled the contract. Sold it the next day with a backup offer for more money. So you got to make sure. That's where using the right lender is so important because that comes into play. Do you have mortgage options where I can avoid PMI? If you work with those Smuckatellis, most of those folks at the banks, you're not even going to get the option. If you don't put down more than 20%, you're paying PMI. If your credit's challenged and you got less than a 680, you're going FHA or you're going to have PMI. Remember, when it comes to a conforming loans, you have the option to buy out your private mortgage insurance.
2 minutes.
And based on your credit, it's usually very, very cheap to be able to do so. Better to do so. PMI, while we're never going to rent versus paying PMI, we're going to do everything we can to help you avoid that. And lastly here, will my loan be sold after closing? Chances are yes. It's a great question, and I get it all the time. But I say the same thing to everybody. I said, listen, if I hold it for you, but instead of your rate being 3.5, I do 4, because you really like me. You love my radio voice.